If you or someone you love receives Social Security benefits, what we are about to tell you in this video could change everything about how you plan your finances going forward. A seismic shift is happening right now inside the Social Security system, and the consequences are being felt by millions of Americans across every age group, every income level, and every corner of this country. We are not talking about a minor adjustment or a small tweak buried in the fine print of a government document. We are talking about a series of drastic, sweeping changes to the way Social Security operates, the way benefits are calculated, the way payments are delivered, and the way the agency itself is being restructured from the inside out. These changes are already in motion, the effects are already being felt, and if you are not informed about what is happening and what it means for you personally, you could be caught completely off guard. Stay with us, because in the next 30 minutes, we are going to walk you through every single thing you need to know. Hello, everyone, and welcome back to U.S. Benefits Update. I am your host, Claire Hollister, and thank you so much for being here with us today. This channel exists for one reason and one reason only, and that is to make sure that you have access to the clearest, most accurate, and most up-to-date information about the government programs and policy changes that directly affect your life and your family's financial security. We cover Social Security, Medicare, SSI, SSDI, stimulus programs, immigration updates, tax changes, and anything else that could impact your bottom line. If you are not yet subscribed, please take a moment right now to hit that subscribe button and turn on your notifications, because the story we are covering today is one of those stories where the details genuinely matter and where being informed could make a very real difference. Now let us get right into it. Here is the situation as it stands right now. The Social Security Administration is undergoing what many experts, advocates, and lawmakers are describing as the most significant institutional transformation in its nearly 90-year history. The changes that are being implemented span multiple fronts simultaneously, and together they add up to a picture that is deeply concerning for tens of millions of Americans who depend on Social Security as a critical pillar of their financial lives. On the structural side, the Social Security Administration has been subjected to dramatic staffing reductions as part of a broader federal workforce reduction effort. Reports indicate that the agency has lost thousands of employees through a combination of layoffs, early retirement incentives, and voluntary departures driven by uncertainty about the future of the agency itself. Field offices across the country have been affected, with some offices reducing their hours, limiting in-person services, or facing the prospect of closure. The agency's phone lines and online systems have been under tremendous strain, with beneficiaries and applicants reporting unprecedented wait times and difficulties accessing the help they need. On the policy side, new requirements and rule changes are being implemented that affect how identity is verified, how benefits are accessed, how payment methods work, and what documentation people need to provide when making changes to their accounts. For millions of Social Security recipients, particularly older Americans and people with disabilities who are less comfortable with digital systems, these changes represent a significant new burden. And at the same time, there are serious ongoing conversations in Washington about the long-term solvency of the Social Security trust funds, which adds another layer of uncertainty to an already turbulent picture. To understand the full significance of what is happening, it helps to step back and look at the history and structure of Social Security, because this program is not just another government benefit. It is the foundation of financial security for a vast portion of the American population. Social Security was signed into law in 1935 by President Franklin D. Roosevelt as part of the New Deal, designed specifically to provide a safety net for workers who reached old age, as well as for people with disabilities and for the families of deceased workers. Over the decades, it has grown into one of the largest and most relied upon government programs in the world, currently paying benefits to approximately 70 million Americans every single month. The program is funded through payroll taxes, specifically the Federal Insurance Contributions Act tax, or FICA, which workers and their employers both pay throughout a person's working years. The idea is straightforward. You contribute to the system while you are working, and then you draw benefits when you retire, become disabled, or otherwise qualify. The Social Security Administration, which administers the program, operates a network of more than 1,000 field offices across the country, serves tens of millions of people annually through phone, online, and in-person interactions, and processes an enormous volume of claims, appeals, and account changes every single day. For decades, while there have certainly been political debates about Social Security's future and periodic adjustments to its rules, the basic infrastructure and operating model of the agency remained relatively stable. Staffing levels were maintained at levels sufficient to serve the public. Field offices were accessible in communities across the country, and the processes for applying for and receiving benefits, while sometimes slow, were at least functional and predictable. What is happening right now represents a departure from that stability that is unprecedented in the modern history of the program, and the consequences are rippling out in ways that are affecting real people's ability to access benefits they have earned and paid into over a lifetime of work. The staffing reductions in particular represent a fundamental challenge to the agency's ability to function. The Social Security Administration was already dealing with a significant backlog of disability claims and appeals before these changes began. Wait times for disability determinations had been stretching to a year or more in many cases, and the agency had been struggling to hire and retain enough staff to address that backlog. Against that backdrop, reducing the workforce dramatically does not speed things up. It makes them dramatically worse, and the people who suffer the consequences of that are the millions of Americans who are waiting to find out whether their disability claim has been approved, who need help understanding their benefits, who are trying to navigate a complex system with rules that can be genuinely difficult to understand without assistance. So let us talk specifically about who is most directly affected by these changes, because the impacts are not evenly distributed. Some groups are facing consequences that are particularly severe, and it is important to understand who those groups are so that you can assess your own situation and the situation of people you care about. Retirees represent the largest single group of Social Security beneficiaries, currently numbering around 50 million people. For most retirees, the most immediate concern relates to the new identity verification requirements that are being implemented. The Social Security Administration has been moving toward requiring people to verify their identity online through a system that uses digital tools and sometimes biometric technology. For younger, tech-savvy retirees who are comfortable with smartphones and computers, this may be a manageable transition. But for older retirees, particularly those in their 70s, 80s, and 90s who may not have reliable internet access or who are not comfortable with digital systems, this requirement creates a genuine barrier to accessing and managing their own benefits. People receiving Social Security disability insurance, known as SSDI, are facing their own set of serious challenges. SSDI is the program that provides benefits to workers who develop a disability that prevents them from engaging in substantial gainful activity. The application process for SSDI has always been complex and demanding, requiring extensive medical documentation and often taking a year or more to complete. The staffing reductions at the Social Security Administration have made this already difficult process even more challenging, with reports of longer processing times, delayed decisions, and overwhelmed staff who are handling larger caseloads with fewer resources. Supplemental Security Income recipients, the SSI population, are among the most vulnerable of all Social Security beneficiaries. SSI provides benefits to elderly, blind, and disabled individuals who have very limited income and assets, regardless of their work history. Many SSI recipients have no other source of income and rely entirely on their monthly SSI payment to cover their basic living expenses. For this population, any disruption to the delivery of benefits, any delay in processing a change of address or a change in income, or any confusion about the new requirements being implemented can have immediate and severe consequences. Survivors and dependents represent another significant group. Social Security also pays benefits to the surviving spouses and children of deceased workers, as well as to the dependent children of retired or disabled workers. When a worker dies or becomes disabled, the family's ability to navigate the system quickly and accurately to claim the benefits they are entitled to is critically important. The staffing reductions and service disruptions at the Social Security Administration make that navigation more difficult and more uncertain than it has been in the past. Let us now get very specific about what is actually changing and what those changes mean in practical dollar terms for people who receive Social Security. One of the most important things to understand is that the benefit amounts themselves, the monthly checks that retirees and disabled workers receive, have not been reduced by these structural changes. The 2026 cost of living adjustment of 2.5% that we have covered extensively on this channel is still in effect, and the formula for calculating benefits based on your earnings history has not changed. If you are already receiving Social Security and your check is being deposited normally, that aspect of your benefits is functioning as it should. However, what is changing in ways that can directly affect the amount of money you effectively receive involves several specific areas. First, the new in-person identity verification requirement is perhaps the most immediately impactful change for many beneficiaries. Under recent policy shifts, certain changes to your Social Security account, including changes to your direct deposit banking information, changes to your address, and certain other account modifications, now require in-person identity verification at a Social Security field office for individuals who are unable to complete the process online. This represents a significant departure from the previous practice of allowing many of these changes to be made by phone. The reason this matters financially is that if you need to update your direct deposit information, perhaps because you changed banks or opened a new account, and you cannot complete the online verification process, you now need to visit a field office in person. If your nearest field office has reduced its hours, is significantly understaffed, or has a long backlog of appointments, that process could take considerably longer than it used to. And if your payment is scheduled to go to an old account that is no longer active, there could be a gap in receiving your benefits while you navigate that verification process. For people who receive paper checks rather than direct deposit, which still represents a meaningful portion of the Social Security recipient population, there are also concerns about how the ongoing operational changes at the agency could affect the reliability and timeliness of those payments. While there have been no official announcements about changes to the paper check program, the general climate of uncertainty and operational disruption at the agency means that anything is possible, and that recipients should be paying close attention to their payments and reporting any issues promptly. There is also the question of the DOJ-related data access controversy that has been swirling around the Social Security Administration. Reports have emerged that the Department of Government Efficiency, operating under the broader federal restructuring effort, sought access to Social Security data systems in ways that raised significant privacy and security concerns. Congressional members and privacy advocates have raised alarms about the potential exposure of highly sensitive personal and financial data belonging to hundreds of millions of Americans. While the full scope of what data was accessed and how it may be used remains unclear, beneficiaries have been advised to monitor their accounts and their credit reports for any signs of unusual activity. The timeline of these changes is important to understand because some of what we have been discussing is already fully implemented, some is in the process of being rolled out, and some involves longer-term trajectories that will unfold over the coming months and years. The staffing reductions at the Social Security Administration began taking effect in early 2025 and have continued through the first part of 2026. The effects on service levels and wait times are therefore already being felt across the country right now as you are watching this video. The new identity verification requirements for certain account changes have been implemented on a rolling basis, with some elements already in effect and others being phased in over time. If you need to make changes to your Social Security account in the near future, it is important to check the current requirements on the official Social Security Administration website at ssa.gov because the rules have been changing and what was true a few months ago may not reflect the current policy. The longer-term financial outlook for Social Security is also a crucial part of the timeline picture. The Social Security Board of Trustees, which publishes annual reports on the financial condition of the Social Security trust funds, has projected that the combined trust funds for retirement and disability benefits could be depleted within the next decade if current trends continue without legislative action. If the trust funds were depleted, it would not mean that Social Security benefits would stop entirely, but it would mean that the program would only be able to pay out what it collects in payroll taxes in real time, which would represent a significant reduction in benefits, potentially around 20% or more, unless Congress acts to address the shortfall. That timeline gives lawmakers roughly a decade to find a solution, but history tells us that major Social Security legislation tends to move slowly and involve significant political conflict. The Social Security Fairness Act, which was signed into law in January 2025, and which we will discuss in more detail shortly, showed that Congress can move on Social Security when there is sufficient political will. But that legislation increased benefits for certain groups, making the solvency challenge somewhat larger, which means that the pressure for a broader fix has actually grown. The window for action exists, but it requires congressional attention and a willingness to address what has historically been one of the most politically sensitive issues in American politics. The expert community has been outspoken about these changes, and the voices range from deeply alarmed to cautiously concerned, with very few expressing optimism about the current direction of things. Nancy Altman, a leading Social Security scholar and co-director of Social Security Works, has been among the most vocal critics of the current approach, arguing publicly and in congressional testimony that the staffing reductions and operational disruptions represent a deliberate undermining of an agency that is essential to the financial security of tens of millions of Americans. Shouting. She and others in the advocacy community have used the phrase sabotage to describe what they see as a systematic effort to degrade the agency's ability to serve the public. Economists who study retirement security and the social safety net have raised particular concerns about the timing of these changes relative to the demographic pressures the program is already facing. The baby boom generation, the largest cohort in American history, is now fully in its retirement years, which means that the number of Social Security beneficiaries is growing rapidly at exactly the moment when the agency is being asked to do more with significantly fewer resources. Size. The math on that combination simply does not work in favor of smooth service delivery, and the result is predictable. Longer wait times, more errors, more delays, and more people falling through the cracks of a system that is supposed to be their safety net. Former Social Security commissioners and agency officials who served under both Democratic and Republican administrations have also weighed in, with several expressing concerns in public forums and media interviews about the pace and nature of the changes being implemented. These are people who spent their careers building and running this agency, and their warnings carry significant weight precisely because they come from people who understand how the agency works from the inside and who have seen what happens when it is not resourced adequately to serve the public. On the other side of the debate, proponents of the changes argue that the Social Security Administration, like many large government agencies, had accumulated inefficiencies over time and that a restructuring was long overdue. They argue that modern technology can allow the agency to serve the public more efficiently with fewer staff, and that the transition period, while difficult, will ultimately result in a more streamlined and effective agency. Curious. That argument is contested by the evidence on the ground, which shows service degradation rather than improvement. But it is the argument being made by those who support the direction of change. We also need to spend some time discussing the Social Security Fairness Act, which was signed into law in January 2025 and which represents a genuinely significant and positive change for a specific group of Social Security beneficiaries. This legislation eliminated two provisions that had been reducing Social Security benefits for certain public sector workers for decades. Those provisions were the windfall elimination provision, known as the WEP, and the government pension offset, known as the GPO. The windfall elimination provision reduced Social Security retirement or disability benefits for workers who also received a pension from a job not covered by Social Security, such as certain government jobs. The government pension offset reduced Social Security spousal and survivor benefits for people who received government pensions from non-covered employment. Together, these two provisions had been reducing benefits for millions of teachers, police officers, firefighters, and other public sector workers for decades, in many cases by hundreds of dollars per month. Excited. The elimination of these provisions is a genuine and meaningful benefit increase for the affected population, which numbers in the millions. Former public school teachers, state and local government employees, and federal workers who were subject to these offsets are now receiving their full Social Security benefits without the reductions. For some individuals, this means an increase of several $100s per month, which is a life-changing difference for people on fixed incomes. If you or someone you know worked in the public sector and had Social Security benefits reduced under these provisions, it is absolutely worth checking whether the repeal of WEP and GPO results in a higher benefit payment for you. The Social Security Administration has been processing these adjustments and issuing retroactive payments for the period since the law took effect. However, given the staffing challenges and workload pressures the agency is currently facing, the processing of these adjustments has been slower than many affected beneficiaries would like. If you believe you are entitled to a benefit increase under the Social Security Fairness Act and have not yet seen a change in your payment, you should check your My Social Security account at ssa.gov and, if necessary, contact the agency directly, though be prepared for potential wait times given the current operational environment. Size. Let us bring this down to the level of real people and real consequences, because behind every policy change and every operational disruption are actual human beings whose daily lives are affected in very concrete ways. Consider the story of a 78-year-old widow living alone on Social Security as her only income. She receives approximately $1,400 a month, which is barely enough to cover her rent, utilities, food, and medications. When she needed to update her direct deposit information after her bank merged with another institution and her account number changed, she discovered that the process was no longer as simple as calling the Social Security Administration on the phone. She needed to complete an online verification process that she did not know how to navigate. And when she tried to get help by phone, she was placed on hold for over an hour before reaching someone who could walk her through the steps. Frustrated. During the period when her payment information was in limbo, she was genuinely anxious about whether her next check would arrive on time. That anxiety is not an abstraction. It is the lived reality for millions of Americans in similar situations. Or consider the situation of a 52-year-old man who developed a serious chronic illness that forced him to stop working and apply for Social Security disability insurance. He filed his application in good faith, submitted all of the required medical documentation, and then waited and waited and waited. Sighs. His case has now been pending for over a year and a half, stretching into territory that would have been considered extraordinary just a few years ago, but is increasingly common in the current environment. His savings have run out. He has had to rely on family members for financial support. He is appealing a denial while simultaneously managing a serious health condition. The staffing reductions at the Social Security Administration did not create this backlog problem from scratch, but they have made it dramatically worse, and the human cost of that is borne by people like him every single day. Think about what these changes mean for immigrant communities as well. Many legal permanent residents and naturalized citizens receive Social Security benefits based on their work histories in the United States. For non-native English speakers, particularly older immigrants who may have limited English proficiency, the new digital verification requirements and the reduction in phone-based customer service represent a disproportionate burden. Community organizations that serve immigrant populations have reported increased confusion and distress among their clients who are trying to navigate a system that has always been complex and is now even more difficult to access. Exhales sharply. For families with disabled children who receive SSI, the stakes of any disruption to benefit payments are extraordinarily high. SSI recipients have extremely limited financial resources by definition, and a missed or delayed payment can mean an immediate crisis, an inability to pay for food, medications, or housing. Parents of disabled children who are on SSI often spend enormous amounts of time managing their children's cases, ensuring that the agency has the correct information and that income reporting requirements are being met. In an environment where the agency is understaffed and overwhelmed, even small errors or delays in processing can have consequences that ripple through an entire family's life. We have covered a great deal of ground today, and we want to make sure you leave this video with the most important information clearly in mind. So let us do a final summary of everything that matters most. The Social Security Administration is currently undergoing dramatic and unprecedented changes that are affecting the agency's ability to serve tens of millions of Americans. Size. Staffing reductions have been significant, service levels have declined, and wait times have increased across phone, online, and in-person service channels. The new identity verification requirements mean that certain changes to your Social Security account now require in-person visits or online verification that was not previously necessary. If you need to make changes to your account, check the current requirements at ssa.gov before you begin the PR. OSES, the Social Security Fairness Act, signed into law in January 2025, eliminated the windfall elimination provision and the government pension offset, resulting in benefit increases for millions of former public sector workers, including teachers, police officers, and other government employees. Curious. If you believe you are entitled to a higher benefit under this law and have not seen a change in your payments, check your account and follow up with the agency. The long-term financial outlook for Social Security remains a concern, with projections suggesting the trust funds could face depletion within about a decade if Congress does not act. While benefits have not been cut today, the trajectory of the program's finances is something every current and future beneficiary should be aware of and should follow closely. There is no reason to panic, but there is every reason to be informed and engaged. Calm. Check your My Social Security account regularly at ssa.gov to ensure your information is current and your payments are correct. If you notice any issues, address them promptly rather than waiting. If you have a pending disability claim or appeal, document everything and follow up regularly. If you believe you are owed a retroactive payment under the Social Security Fairness Act, pursue that claim actively. Determined. And if you encounter difficulties accessing services or resolving issues with the agency, know that you have the right to escalate your concerns, including by contacting your elected representatives in Congress, who have constituent service staff specifically to help people navigate issues with federal agencies. If this video was helpful to you, please take just a moment right now to give it a thumbs up. That one small action helps our video reach more people who need this information, and it tells us that we are covering the stories that matter most to our community. Excited? And if you are not already subscribed to U.S. Benefits Update, please subscribe right now and hit that bell icon so you are notified every single time we publish a new video. We cover Social Security, Medicare, SSI, SSDI, government benefits, tax updates, financial relief programs, and immigration news, and our commitment to every viewer is the same: clear, accurate, actionable information that helps you make better decisions for yourself and the people you love. Sincere. I am Claire Hollister, and on behalf of everyone here at U.S. Benefits Update, thank you so much for watching. Pause. We will see you in the next video.